You spot a perfect 4-hour supply zone setup. The price approaches, you enter the trade, and a sudden, violent candlestick wick spikes up, hits your stop loss, and reverses exactly where you predicted. Standard candlestick charts create a persistent visibility gap. They only record where price traveled, while hiding the specific auction mechanics occurring within the move. The volume indicator on standard retail spot Forex platforms further complicates this. It only measures tick fluctuations, how many times the price flickered, leaving the actual weight of the contracts changing hands a mystery. Because the spot Forex market is entirely decentralized, no central exchange exists to record and report true institutional volume data. To survive this environment, traders require an X-ray approach to see the real-time interaction of market participants hiding inside that wick. We can conceptually zoom inside the very candlestick wick that caused the stopout to examine the mechanics of the market engine. The market functions as a continuous, high-stakes auction, where price moves only when one side becomes more aggressive than the other. Two participants drive this auction. Passive traders provide liquidity with resting limit orders, while aggressive traders consume that liquidity by hitting whatever price is available right now. Under the rules of price discovery, the market cannot tick to the next level until aggressive buyers completely consume every passive limit order resting at the current price. Institutional big fish, like central banks and hedge funds, cannot hide their order sizes in this auction. Their trades are large enough to consume entire levels of liquidity in seconds, leaving a permanent footprint in the volume data. Because price movement directly results from this liquidity consumption, the interaction between aggressive and passive orders is the primary driver of every tick you see. Professionals bypass the decentralized blind spot of spot Forex by watching centralized CME futures data, like the 6E contract. Since the futures and spot markets are arbitrage-linked, the futures tape provides a volume-accurate map of the institutional flow. This is a footprint chart, the specialized tool used to read that data. It allows us to see the exact numbers of buy orders hitting sell orders at every price increment, right at the peak of our original stop hunt wick. We can now identify absorption. This occurs when massive aggressive buying hits an invisible institutional sell limit, causing the upward progression to halt completely as a major player soaks up the flow. Contrast this with exhaustion. The price reaches a new high, but the aggressive buy numbers drop abruptly to zero, signaling that the auction has failed because no participants are interested in trading at those levels. This graph displays cumulative delta divergence. If price makes a new high while the net aggression, the delta, angles downward, the move is losing its institutional support. This identifies a false breakout before it traps you. By looking under the hood, we can see the stop hunt wick was a calculated institutional trap, and the footprint chart provides the definitive confirmation. This visibility often leads to a micro-focus trap. Staring at every tick during low liquidity sessions results in reacting to noise and overtrading. Successful traders treat order flow as a high-probability confirmation filter rather than a standalone system. The professional workflow involves two steps. First, map out the macro narrative using high timeframe supply and demand zones on your standard charts. Second, wait for price to enter these zones before ever opening your micro order flow tools. You then use the footprint chart to look for a definitive yes or no execution trigger based on the presence of actual institutional absorption. By utilizing these footprints, you stop reacting to abstract shapes and start identifying where large participants are forcing the market to move. Stop trading the what and start trading the why. Download FXNX's order flow confirmation checklist and execute your new edge with 0